If you don't invest, you won't have a product and you'll never have a chance to turn things around. In the auto industry, if your product isn't right, you can't succeed. So where do products come from? They come from technological progress. That's why we've been investing heavily in core electric vehicle tech for years. This investment pressures our finances now, increasing losses. Analyzing our R&D spend, it's 3 billion yuan quarterly, 13 billion yearly. That's real investment. This goes into developing new products and technologies. Take chips, huge investment until mass production, all counted as R&D. Similar for OS and other tech, all reflected in our financial statements. We're also building our charging network, especially battery swap stations. We've built many swap stations, connecting areas. This work continues. So we're in contrarian investment mode. Sales aren't hitting targets, but we're investing in new brands, models, tech, and sales networks. It's a balancing act that's gotten a bit out of hand. But we've thought this through. Without this approach, as a new player, we wouldn't have a chance to survive in this industry. Sure, we could let everything fail and just live off bank interest. Billions in the bank could earn us 200 million yearly in interest. But that's not how a real business should operate. So we believe that 2 or 3 years ago, our entire board of directors, including myself and the board team, still thought we should resolutely deposit bank interest. Then why do it? In the 3rd generation product cycle, we need to preserve the legacy. So now everyone sees that whether it's the 90, our ES8, or your 19, these technologies are starting to monetize. So why is this year the next 3 big years? It's the big year for technology, where tech investment begins transforming into economic capabilities, including product experience and cost. Take our magic 9031 chip. Its computing power and performance equal 4 ear-edge chips, but at only a quarter of the cost. The cost is just 1 yuan, saving a lot of money. This is the gross profit brought by R&D, right? There are many more examples like this, so our technology is starting to monetize. Second is the product year. We've launched 7 models this year and released 8 ES8 models, 4 of which are 2015 and 2016 models. Those 3 brands are in place. For democracy's sake, all 3 brands are set. So I think this also shows we're starting to see the results of our product side investment. Third, our infrastructure has also begun shifting from quantity to quality this year. Because we're building this charging network, there must be a process of going from lines to planes to form a true network. After hitting an inflection point, quantity turns to quality. In other words, the experience of 3,000 stations versus 1,500 isn't just twice as good, it's 4 times better. That's the effect. So this year, with things like our 1,000 high-speed stations and 3,000 charging stations, a network has formed. 1,000 stations in the Yangtze River Delta. Once this network forms, it's different. Jiangsu and Guangdong have already achieved full line coverage, so the network effect is kicking in early. So this infrastructure year also has some milestone events, like our 1,000 high-speed stations, full provincial coverage, and complete connectivity along the 318 national highway. A real network has formed, and the user experience has transformed from gas to electric. Now everyone talks about the future in terms of products and technology, but can't really say much about it. We're actually doing quite well. What's the main criticism people have about us now? It's about sustainable operations and sustainability. We're losing money, though we can say it's all investment. I'm spending on R&D, I'm investing in customer service systems, spending on charging and battery swap networks. But ultimately, as a company, you need to be profitable someday. Chinese media and public aren't as tolerant of losses. Tesla can lose money for 16 years. Think the market will let us do that? No way, it's impossible. We must run the company well, ensure stable operations for our users' benefit. When will the future arrive? Will our company collapse in the future? That's a tough question to answer. All companies eventually fail. When do you think we'll go under, but not during our car's lifespans? Our future's 3D online with transparent finances. We've been losing money for years. But where are we losing it? We're losing in R&D, in new brand development, in technological innovation, in core tech investments, and in infrastructure upgrades. This year, we'll start seeing returns. Q4 profitability is our goal for user trust. Challenges remain, but so do opportunities. Why? Profit equals sign sales X margin expenses. Q4 sales are secured by back orders. 4 models have waiting lists, including L60 waitlist shows Q4 sales are secure. As for profit margins, we've improved efficiency this year. After quantifying our processes and refining management, our margins will keep improving. Now it's all about our delivery, execution, and operational capabilities. This Q4, unlike past years, we won't have big product launches like NIO usually does. NIO is doing that in late September this year. Q4 is for steady sales, deliveries, and wrapping up the year. We're focusing on the day-to-day operations this quarter. Unlike Q2 and Q3, Q4 has fewer big events. We'll use this time to stabilize. From this perspective, I believe we have reason to be confident. Challenges are big, but there's room for improvement. Our goals are clear. So I'm very optimistic about our prospects.
Can't imagine if we couldn't operate in the future. It's not just 1 or 2 cars, not 10 or 20,000 cars. It's over 800,000 cars. So in this situation, though some users are unhappy with me, views on me now are surely different, but managing 800,000 plus users is possible. Many things are improving for the future, but we're still far from being profitable when we talk about quarterly profits. If everyone thinks about it, if we become profitable in future quarters, if we maintain stable operations consistently, then everyone's delivery, everyone's car usage benefits, car resale values might be guaranteed. This is very real. What's the main doubt about us now? It's about business sustainability. Although we can say ourselves, all of this is investment, I've spent on R&D, I've spent on user services and system building, spent on charging network, but ultimately as a company, one day you need to be profitable, but it can lose for 16 years. Think the market will allow 16 years of loss?